All right, I need everybody to go on Rumble right now and follow my page so you don't miss out on any videos or live streams. Anytime I share the links on X, they get hidden due to the fact that we are no longer allowed to post external links on X that get broadcasted out to everybody. So even if you have your notifications on X, you might not get it. So follow, turn the notifications on. That way you don't miss any of the free content I'm putting out here in the future. All right, what's going on, everybody? Welcome. Let's get into it. So, as it's titled, just low key, relaxed, chilling. Gonna chart some stuff up that you guys sent in over on X. So let's get to it. There's no morning brew tomorrow, so I'll go over NASDAQ and SPY as well. But yeah, I gotta be honest, I'm questioning more and more, why do I do this to myself? But it's okay, we'll keep rolling. Let's see, where are we? Let's share. All right, you guys should be able to see it now. All right, cool. So obviously a nice day again. If you listen to Morning Brew, yep, again. Yeah, so very nice move. Excellent move this week. As we kind of expected, we had a lower start to the morning right off the rip, and then ultimately ran higher throughout the rest of the day. So kind of like what was said at 9 o'clock this morning. Now, where we currently sit, we are about to fill this daily imbalance right here. That gets you up into 19,511. Beyond that 19,511, you're going to work your way back up into your daily breaker right here, which has already been filled, which is really encouraging that thus far we're back at it again. Okay, so the second attempt, I really don't expect this to carry any weight whatsoever. And I do expect the Mando model to complete on the daily time frame here at 20,025.25. Okay, so back over to the weekly, the first focal point for the week, really, for the first time that we spoke this week, was Tuesday morning, when we said the first move and the first objective really for the bulls in this scenario would be to prevent a weekly imbalance from forming, and that was a move towards 19,140, which we did. We're well above that now. The most encouraging thing that could happen tomorrow to close out the week would be a weekly close above last week's open, which is at 596, about 130 points higher. Could it happen? That's a possibility, but we still have showtime looming. At this point, if we were to reach showtime here on NASDAQ, I would fully expect ES to have already taken out that all-time high due to the fact that there is a bit of divergence between the two, right? No imbalance holding SPY back, but if you were to look over at NASDAQ, there is. Okay, so that's really the expectation at this point to get up into showtime. From that point, that's when I'm really hands off, right? We'll have ES taking the all-time high when we're at all-time highs. For anybody giving these radical price targets or anything like that, they're just guessing, right? At that point, price has never been there before. There's no liquidity resting at that point. So in order for price to actually come down or stop moving higher, right? Somebody that we don't know what their plan is, what they're doing, is taking some off, right? And until that point, everybody wants to take these guesses. Oh, SPY 600, SPY 607. I love when they give the random numbers when they're up there as well, because it's like that is the most obvious guess for anybody who has any understanding of how price action works. But I love to see it. Actually, I don't really love to see it. It's kind of sickening. I'm really getting sick of X and all this garbage, to be honest with you. I see the same lame stuff over and over again, and just turns out it's always wrong. But it is what it is. You know how it goes. So anyways, that's just NASDAQ as a whole. I mean, even if we were to break it down onto the smallest of time frames, you go back 2 days when we said, okay, low resistance liquidity run. And there you go. Okay, we took out liquidity in order to give us that run higher. Okay, took out swing low, 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 all those relative equal lows to create a nice run on liquidity here to take out all three of these in a nice rally at that. Okay, this was the candle that we discussed this morning in Morning Brew. retracement back down into that hourly imbalance, and so far so good. We are now filling that hourly imbalance. We do have one more hourly, which lines up with the high of the daily imbalance. Right there's your mark, 513 to 571. Where is it? Whoops. Okay, there you go, 511. Okay, so right around that area right there. And from that point, really, to me, draw on liquidity at this point is pretty clear. 19,694. You'll notice how, and this is literally perfect when it comes to the idea of talking about speed bumps, right? You hear me say that all the time. I think there could be a speed bump. Actually, listen back to this morning's. Literally, listen back to this morning's. You'll notice how these levels, they're just not made up like many of the others that you've seen. You will notice that there is a reaction to every single one of them. Okay, and there it is. We got up to the high, we filled it, we retraced back down, got into our next imbalance prior to moving higher. Right. That's why, really, beyond the chart, there's nothing that intrigues me whatsoever. No news, no data, no earnings, no nothing. It doesn't matter. The answers really are here, as long as you know how to find them. But yeah, so again, this is exactly what a speed bump would look like, right? Where price runs in. I don't anticipate it being a rejector. I know I said that this morning as well. Was that a rejector to send us back down? Nope. All it was a speed bump, and we're back in another speed bump here. Okay, so ran up to the high of it, retraced back to the low of it. Now it looks like we want to poke our head above. And you got one more speed bump before that final run up towards your ultimate target of 19,694 relative equal highs on the hourly time frame. Look at all of those equal highs, absolutely begging to get smoked. So that is, in short, that's kind of what I got. Just for NASDAQ, SPY, very similar. I mean, look, the only difference really between the two, we can dive into it a little bit more, is the only difference is that we don't have that weekly imbalance looming on SPY, where on NASDAQ we do. Okay, there, nothing, right? So all that's really telling me is that what would you foreshadow or anticipate the draw on liquidity here being? Well, we're in a bullish trend. We're looking at our bar side target after getting down into a discount bullish imbalance. To me, the draw on liquidity is 5,721, and at that point we're at the all-time high. The difference here is that when SPY takes out that all-time high, you are essentially, rating that liquidity that's resting above this point, right, from our previous high. What had to have happened here? Someone had to have shorted that. It's the only thing that could possibly make sense. What had to have happened here? Somebody had to have shorted that. It's the only possible thing that we can, talk about to make sense of things, right? Now, when you have pool of liquidity here, pool of liquidity here, okay, that's a lot of liquidity that's going to get unlocked. How is that going to pivot? Are we going to get that imbalance to offer us a continuation type move, or are we going to sweep that high and immediately retrace, ultimately back down into discount of our bullish range? That's always the question. So when we reach that ultimate Mando model complete, that the culminating end to that the trade idea or whatever it might be, um that's essentially what happens next. That's essentially what we're looking for next. And I know it sounds silly, we either go up or down, but there is a staple to that often recurs, and that's that imbalance. If we make that imbalance up and through, you can expect a continuation type move. If you're to reach up above and sweep down below, not only is that a protected high now, but you can look for that discount retracement back into a discount bullish imbalance. That's just really the way the market works. And I've done this 100 times, and I'm not going to do it tonight because I think if you want to see it, go back and watch some other stuff. But we've done this how many times on literally any ticker you could imagine. We go back to 1960s and for friggin' Boeing, or what else did we go back really far to? I think Verizon, we went back all the way. It's the same story. It's just a matter of playing the probability. And of course, anytime you're shrinking it down to a smaller time frame, it's going to be a little bit more difficult. Both sides of the trade might become a little more clear. When that happens, obviously, it's a good time to move on, look for another one, because there's a lot of them that you could pick from. So that's index overview right there. We'll keep rattling these off, but let me pull over here and we'll get into these individual names now. But Let's see. It's so funny. Everyone the last 2 days has just been an absolute genius. It's crazy. I can't even log on this app anymore. It's sickening. Um, anyways, all right, let's go through some of these names. As you can tell, I'm annoyed at seeing the same crap over and over. And you guys really, I hope it's not you guys, but these people still fall for that. Come on. All right, let's do it. Let's go. We'll do Apple first. Ready? Start from the monthly, work our way down as always. Okay, so as you could see, last month we reached down into this monthly bullish imbalance. Not quite discounted, but most of tech is not discounted on a monthly time frame whatsoever, right? That's why when we inevitably and eventually get that quote unquote bear market or quote unquote crash, that's that move that can hurt, bring you down into discount of whatever the range is. And at this point right here, again, this is not me by any means saying that I think Apple's going down into discount, but at some point when it does, because it has historically a zillion times, just like any other chart, that's why those bear markets or those crashes seem to hurt so bad. All they are is discount retracements. Oftentimes, the speed in which it getting down into discount is what we would refer to as that crash, and the long drawn out retracements down into discount are what we consider bear markets. Now, just go back in time. Literally, go back and look. Where's COVID? Okay, what is this COVID situation here? Okay, COVID crash. Just a discount retracement into a bullish imbalance for your run through highs. What about 2022? Let's do that one. That one's even better because that's a bear market, long and drawn out. Okay, what is that? That's just a discount retracement into a bullish imbalance before your next run on highs. Repeatable? I think so. Okay, so anyways, let's go to Apple. Okay, so here, let me label this. Haven't charted this in a while. That's a monthly bullish volume imbalance. Okay, showing you urgency to move higher. The worst possible scenario for bulls on Apple here would be a bearish order block and a close down below this bullish imbalance. Okay, at the moment, doesn't look all that likely. Still possibly could, but here's the thing: until I see some sort of imbalance to the downside on a monthly time frame, I am really not expecting anything too drastic. Okay, you can go back historically as well. When does price tend to retrace down into discount of its range? When you form an imbalance. Okay, here's your imbalance, there's your discount retracement. Okay, go back and you'll notice here, since our most recent run, there has not been one bearish imbalance that has formed in the entirety of this, whatever you want to call it. So yeah, that's where Apple is on a much larger time scale. So I'd rather be a little late than try and jump it and be wrong 500 times. That's not really optimal to me. But here's Apple yet again, from your low to your high. Here's your discount retracement into not only a bullish imbalance, but you also have your bullish breaker here. Low, high, lower low, break up and through, retracement back down to your breaker, lift off. So far, so good. Okay, so to close out the week, I think it's really important for Apple bulls to push this over 223.89. Doesn't have to close above or anything like that. Just a wick up into that area would prevent a weekly imbalance from forming, and that would be very encouraging for bulls moving forward. You will also notice how perfectly it's held its weekly bullish imbalance right here. Okay, right down to the bottom of it, to the tick, taking out last week's lows, and since then it's been up and only up. Okay, another name with relative equal highs above. The Mando model here on the weekly completes at 237.23 with time. Okay, so that's Apple. Looks pretty good. I mean, we can keep going here. Let's go to the daily. Okay, let me just clear out some. Oh, it was just one little drawing there. All right. But here's your Apple daily. Let's see. Okay, very similar to what your weekly looks like, but here it is. Okay, weekly bullish or daily bullish imbalance. Here's your discount retracement. So far, so good, even on this most recent run. So this is a way where you might find something after the fact. You might not be a part of something yet. Why would we reject here? Bearish imbalance. Ha 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 ha. Okay. We continue on. Okay, we actually do have a bearish imbalance right here that we have since rejected from gathered liquidity. We have relative equal highs above, but we also have relative equal lows. So for me personally, while on an overarching higher time frame scale, I do believe this is going higher. I really don't want to touch this. I mean, it's tough. Okay, low, high, lower, low. You do have a breaker, which we're holding on to right now. It's not necessarily my model, so it's not something that I'm totally interested in. But a move from this point, you can completely justify. To make me feel the best, a discount retracement would have been better. Doesn't necessarily have to do that, but again, would make me feel much better about the situation. But now we have relative equal highs above as well. Overarching, looks like the direction is pretty clear cut here. All right, so that's Apple. Let's go to Toast. I had a good laugh about this one here. All right, so since its birth back in 2021, this has just been the setting of a bearish market structure. Okay, due to the fact that this company is only a couple years old, we don't have all the data in the world, which is fine, but we have to play with what we got in front of our face. Okay, so at the moment we have, let's see, nope, no imbalance. Okay, good. So where we currently sit, let me mark this out actually. Okay, you'll notice we got into this. Oh, that doesn't look all that bad actually. I might start messing with this, who knows. But for right now, we're going to keep it universal. But this is what we're currently working with. We had a bullish imbalance here on the monthly time frame. We also had a bullish breaker, low, high, lower, low, break up and through. We would anticipate the high of that sequence to act as a support level, and so far so good. Okay, from this point, we actually don't have any resistance on a monthly time frame, higher time frame. I'm sure there's a ton of smaller time frame levels, and we'll get to that. But on a higher time frame, 35 is your next monthly imbalance, with 40, 92 being 50% or discount of your overarching bearish range. And ultimately, if we're looking at it from this perspective, we got our imbalance formed. This is the ideal situation for me and the odd NAM model to be looking for that retracement up into discount. Let's see if the smaller time frames will echo our idea here. Okay, so far so good. Let's see. Whoa. Okay, so first things first, we took out this high, whoops, here with this price run from your low to your high. Now, here's your discount retracement into a bullish imbalance. There's your run for highs. Manda model is complete. Okay. Now, here's something that I should note. So you'll notice, do you see how each one day here we set a new low, right? This would not be relative equal lows. This is actually what I would identify as a double bottom or a triple bottom, right? Why is that, right? Because that term gets thrown around all the time. But when price leaves perfectly equal, or, okay, so when price leaves perfectly equal, or when the second or third, whatever it might be, low is not lower than the previous lows, you're leaving behind relative equal lows or multiple pools of liquidity. So in this case, right now, let's just say this is flipped. This is the low. We barely, we did not take out the previous low. And then on this one, we did not take out the low again. Now we have three pools of liquidity resting down there. And if we believe due to or from previous practice and price research that price tends to gravitate towards liquidity, right? We have three pools there. So is that going to be a sustainable double bottom the way that everybody throws it around? When you see double bottoms that actually like to get up and get going, the ones that we want to be a part of, that is oftentimes when you'll see these lows getting swept. Okay, you're gathering all of these stops. Those stops were rated. These stops were rated all in the process prior to making that up move, right? That's the difference between what a real double bottom is versus what is ultimately going to be a short-lived pop just to get you smoked, sucker more liquidity in, and then take you out. All right, so we'll continue on here with Toast. Here's your weekly from your low up to your high. Notice how there was no discount retracement. Can we justify that bounce? Of course we can. We always can. There's a bullish imbalance. Beautifully done. Okay, there's your run. Okay, not quite the Mando model. We did not get into discount, but now we do. Ready? There's your price run. Here's your discount retracement into a bullish imbalance. Left behind relative equal highs. Let's confirm and make sure this is perfect. 2788, 2790. Beautiful. We have relative equal highs. Okay. So this second high was not higher than the first high. That means we have liquidity here and we have liquidity resting above, because this high here did not take out the liquidity from that previous high made. Okay. So think about it. Somebody went short here, and in order to protect that position, double down, right? I'm not saying that this is the exact way it has to happen, but just use that thought process. And that is oftentimes the draw on liquidity and where price is likely to gravitate towards. And that's at 2790. That's where the Mando model would complete here on the weekly time frame. So this is a pretty good one. Good eye there, Triple M. All right, let's keep it rolling here. I'll look in the chat and see. Nope. Okay. Ready? Let's go. Let's do Clover. All right. So Truth Seeker has been asking for these names for a while, and usually I see so many of them and I just immediately can't because there's too many. But Clover, right off the bat, I'm not gonna touch this at all. It's a penny stock. I avoid those. To me, the ample or the necessary liquidity in order to drive price is not currently present. It needs to come externally, and I don't know when it's going to come in externally, and I don't want to sit in something forever. So the timetable of it automatically gets pretty garbage. But I will tell you that we did form a bullish breaker: low, high, lower, low, break up and through. Here's your bullish breaker, the high of that sequence. We can anticipate that acting as a support level moving forward. We just swept buy side here. So, of course, it's a penny stock. So, really not something I'm interested in. But if I were to ever be interested in it, it would be like right there off the breaker and in that monthly bullish imbalance. So, at the moment, no interest whatsoever. Very similarly here, it's going to look exactly the same. Low to your high. Yep, not interested unless we could take out these relative equal lows down there in discount of your bullish range. So that's Clover. Celsius, sure. Let's do Celsius. Okay, deep discount. Oh wow, look how perfect that is, huh? Anyways, that's a mitigation block right there. Okay, so you have your, it's a little different from what a breaker would look like, but you have your low, high, higher low, mitigation block here. Quite perfect. Inside a bullish breaker, inside and tap the bottom of a bullish monthly imbalance. So I think I don't know if it was this week or last week, but basically tweeted, do or die type of situation, which in reality it kind of is. I mean, it's got some range to the downside before the trade really goes bad, but this is really an area in which I would like to see it get going a little bit. So here's Celsius again. Okay. And similarly, okay, so really in this situation, I don't have all that much interest unless we can show some resilience to mitigate one of these bearish levels. So for example, there's what's likely to form a bearish weekly imbalance right there. I need to see one bearish level get mitigated before I think it could really get going. And until then, I'm not really all that interested. Let's just check out the low here. 31.55, 31.71. So we are leaving behind relative equal lows. Yeah. So, like I said, it's not technically dead for a little bit, but I need to see some urgency before I just kind of jump into something that has really just been a total dud for months now. So that's Celsius. Let's go back to the other ones here. Okay, what else we have? Upstart, sure. So Upstart is my baby. Okay. Still looking good. Bullish imbalance down here in discount on your monthly. Nice lift off from there. Notice how the low of this month essentially just came down to prevent another bullish imbalance from forming, which is a-okay. Let's go to the weekly here. There we go. So we got into our bullish breaker here on the weekly time frame from your low to your high. Here's your little retracement. Let's just see if that was actually discounted. Let's see. I'm usually good at eyeballing it. Oh, yeah, it was. Okay. So we'll look at the shorter duration move first. Low, high, discount retracement, bullish imbalance. Not only do you have a bullish imbalance, but you also have a bullish breaker. I'll show you that in a second. Hold on. Okay. Here's your breaker. Low, high, lower low, break up and through, retracement back down to the high of that sequence. We would anticipate that to act as a support level. So, and we have relative equal highs at this point. So 45.71, then 49.62, and eventually 72.58. I've tweeted this one a million times. I'm just not tweeting it anymore. But yeah, that's upstart, good spot. So the most bullish situation would be for tomorrow to prevent a weekly imbalance from forming. If that weekly imbalance were to form, all that leads me to believe is that this is going to take more time than I wanted, but I'm trading shares, so time doesn't really matter to me here. But that is upstart beauty. And the reason why I have such high hopes for it is if we're just to zoom out and look at our overarching range here from a really long time ago, look where 50% of that range is. Woo! Really far away. So that is upstart there. All right. All right. Redfin. Sure. Let's look at Redfin. Oh, nice, 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 nice. Hold up. Yeah, this is real nice. Okay. So we have swept liquidity and filled the monthly bearish imbalance right here. Okay. Buy side here, 1768. Okay. Here, just to justify why we would have rejected from this point, you have a monthly bearish imbalance right there. Okay. Yeah, pretty good. Pretty good. Okay. You got a couple more imbalances here, actually. That's the only thing. A little bit more of a high resistance run, but another name with a really, really big range, similar to Upstart. Okay. So from this point here, you have a bullish volume imbalance higher here. Okay. So, as someone who basically the whole model is designed to not chase after things, right? Where we currently sit is not ideal for me, but let's see. Let's zoom real quick. Whoop. Okay. And let's just take a look and see. Okay, we swept buy side here. Okay. We have the rest of this bearish imbalance to take care of on the weekly time frame. We have this bullish imbalance below. So, yeah, I mean, ideally that would be the mark, but I'm not so sure we're going to get back down there, unfortunately, for me. Bullish breaker, low, high, lower low, break up and through this high. We would anticipate that acting as resistance level moving forward. Support level moving forward. Apologies. There's your support level moving forward. Perfect to the tick. Yeah. A little bit more to take out the high from 2 weeks ago and get up into this imbalance. Yeah, this is actually a pretty nice name here. Let's see. Yeah. Yep. Let's just see. Hold on here. Price run to take out that high. Whoops. Yep. Oh, no, it didn't get into discount. Yeah, this is still definitely I think it's going to go to 1183 first. It's only 30 cents away, but ultimately still not discounted. I would much rather get a discount opportunity here. If I miss it, I miss it. Oh, well. The baby bottom pattern, I'm not sure what that is. Had a coworker wanted to long gush a few weeks ago at 30. The relative equal low on the weekly were too frightening, so I waved them off, created another one today. Yikes. Okay. Yeah, I haven't looked at that one in a long time. We can do it right now, actually. Let's gush. Whoa. Okay. Yeah. Dang, what a beatdown. Oof. Let's zoom this. Yeah, there's really nothing. Yeah, a lot of relative equal lows down there. Yeah, this is not a pretty chart. Definitely not a pretty chart by my standards, at least. All right, let's keep rolling here. Affirm. All right, so you're going to notice Affirm very similar to Upstart and Redfin, actually. From your low to your high, you got your discount retracement. There's your rocket. Expecting 52.48 for the completion of the Mando model here on the monthly time frame. Your next higher time frame imbalance comes at 83.57 with 50% of your overarching range at 92.73. Okay, so at the moment, there's still 17 days left in this month, but we are in the process of forming a monthly bullish imbalance, something that Upstart has not done. Okay, you also notice here we've respected perfectly low, high, lower low, break up and through, retracement back down into your bullish breaker. Excellent so far. Really, ideally for me, I would like to see that this month and continue to give us a little bit of a run. So let's see Affirm. Smaller time frame context. Let me zoom in. Whoops. Okay. So you'll notice rip through a bunch of these levels over the last couple of weeks. This week, what did we dunk into? That has since given us a nice little bounce. Not only was it a bullish imbalance, but also a bullish breaker. Low, high, lower low, break up and through. As price retraces back down into the high of that sequence, we can anticipate it acting as a support level moving forward. And so far, so good. Yeah, so we got this imbalance left. We've already filled it. So Mando model here on the weekly time frame completes at 52.48. So that is all for you, Truth Seeker. All right, let's do Robinhood. If you're interested in Robinhood, I urge you to go back 2 days ago to Mando's Morning Brew. But here's your monthly low to your high. Here's your discount retracement into a bullish imbalance. So far, so good. Mando model here on the monthly completes at 24.88. Okay, let's continue. Okay, very similarly from your low to your high. You got your discount retracement into a bullish imbalance. So far, so good. Creating a weekly order block. Okay, see that volume imbalance? Gap down in discount oftentimes lead to order blocks. There's your order block. So we have a bearish imbalance coming up here. This could get a little sticky, but again, overarching higher time frame picture. 24.88 completes the Mando model here as well. You might be asking yourself, why would I have my fib mark from here to here? One, I don't trade using fibs. It's just measurements. Okay, it needs an imbalance or it's useless. Here's your low to your high. Here's your discount retracement into a bullish imbalance. There's your run for highs, and that is why my fib is marked from there. We already had a Mando model complete. So this is what we're working with on the weekly as well. So that's Robinhood. Robinhood's another name with a relatively large range. And again, is this company for real? This doesn't have all the trading data in the world, and we really don't have any bearish imbalances up in discount. Very similar to a Palantir. And look what happens when you don't have any imbalances in discount, right? And this is why I don't trade fibs, because if you're trading fibs, you're trading off air. Without the imbalance, these are all useless. And there's no imbalances here. And therefore, you have Palantir shredding through that. Okay. So that is Hood. Let's do Caterpillar. In the meantime, let's flip over here. Okay. Good. Caterpillar. All right. So let's come on over from your low to your high, your discount retracement into a bullish imbalance for your run through highs. Check. Okay. Mando model is complete. With that, you have your next little range being created from your low to your high. There's your discount retracement. Here's your bullish imbalance. There's your run for highs. Mando model complete. Here is your low. Here is your high. Here's your discount retracement. Here's your bullish imbalance. There's your run for highs. There's your Mando model complete. Here's your low. Here's your high. There's not been a discount retracement. Therefore, if we were to run up and get those highs, which very well could happen, all that would do is just extend my range to wherever we hit. Okay, because again, without a discount retracement, all that's suggesting is that the range is not quite set yet. Just fine, no problem. But that is a Caterpillar monthly bullish imbalance. Pretty good. Let's see again. Okay, on the weekly, very similarly, and unfortunately, you have your low to your high. No discount retracement. Wah, wah, wah. That's a shame. But yeah, this could very well run up to the highs. Just not really my setup. So I will not do that. I'll be taking that trade. All right, let's see. Jasmine USD. Okay. No idea what this is. Is this real? Oh, it's a crypto coin. All right. Well, while these concepts do work on crypto coins, the same would apply in terms of the lack of liquidity that is necessary, is not currently present. Conceptually, this could still work out fine. But again, you're playing with a little bit of fire with lack of liquidity. So overall, this is a bearish structure. Okay. But you did form your first imbalance in in discount. Okay. 50% of the range is really, really far away. But again, it's I would view this the same as I would view a penny stock in this situation. So no interest on my end at all. So but all right, let's see what else. There was another crypto that somebody had put in there. I don't think I can get it on I don't think I can get it on TradingView. Let's see. I think I covered them all. Yeah, I think I covered every one. So I'll give you guys, if you got a minute, if you have any questions or you have any names you want to take a look at, feel free to shoot it in the comments here, and I'll get to it. But I think that might be it for everything. So let's just I'll wait for you guys. But in the meantime, let's pull up where are we? What's it called? Let's see what data we got in the morning here. Again, the data itself doesn't really matter. It's the time. Okay, so I'm not seeing any red folder. Import prices at 8:30. That's not red folder. Oh, you know what? We have Ubish consumer sentiment, which for some reason it is labeled as a orange folder event or a medium impact event. I would kind of disagree. I feel like Umish does actually give off some pretty decent moves. So that's at 10 o'clock. So again, I don't really care what the consumer sentiment is. It's just a matter of knowing what time that's going to occur and how price, or I guess you could say, what is more likely to happen following that news drop. Okay. Again, it really doesn't concern me what what the number is. I couldn't even tell you. I couldn't tell you any number that has come out really ever. But I will tell you that knowing those times can assist you in not getting caught on the wrong side of something that might be volatile. You could be correct in your overall, let's say, for example, you're bullish, you long tomorrow before 10 o'clock, and that 10 o'clock move is just a straight knife to go get London lows or something like that. You're stopped out of your trade, and then it rallies higher, and then what? That's the idea there. So, trying to front run it, it's great when you're on the right side of things, but when you're on the wrong side of it, it's not as fun. No, quad witching is next week. the monthly contract expiration. Sure, Dan. We can look at HCA. Strong rejection off high over 400, but now kind of curling. Okay, so let's look at HCA. Monthly. Start always. All right, so I'll tell you this. Being at all-time highs, it just makes it a little bit more difficult, right? The reason for that is we don't know when people are going to give it up, right? And they're going to allow it to go to discount like it did back in 2015. Okay, and specifically in 2015, where did it go? Whoops, here. And you got a little mini breaker in the mix as well. Here. Whoops. Order block. Here. There you go. There it is. That was your 2015 crash. Wink, wink. Okay, so that's pretty sweet. Now we'll move on to 2015. From your low, whoops, to your high of the price run. Whoops. Okay, notice no discount retracement. That's not the high yet. Here it is. From your discount retracement, check. Whoa, holy crap. That's a low wick, okay? But what does that wick do in the process? Sweeps liquidity. Also, whoops, bullish imbalance and discount to the tick. Come on. Come on. That's a beauty. Okay, let's zoom back. Okay, there's your run for highs. Okay, and what was that? That was your COVID crash? Yeah, it was your COVID crash. Just a discount retracement. Here's your low to your high again. Whoops. Okay, where does it go to? Yep. Discount, bullish imbalance. Notice how it hits 50% and respects the imbalance right above. And that volume imbalance right here. Gap higher, showing you what? Urgency to move higher. Okay, there it is. Whoops, let me clean that up a little bit so you can see it. Whoops, there. And I got to just move the, come on, give me the lower one, man. There it is. Good. Look at that. Nice. Bullish volume imbalance. There's your run for highs. Mana model's complete. Here's your next. Whoops. Come on, give it to me. Come on. This is ridiculous. From your low to your high, where does it go? Discount, bullish imbalance, run for highs. Beautiful. And this is what we're currently working with. Low to your high. Nothing suggesting lower at this point, really. We're actually creating a monthly imbalance in the process. Okay, let's go over here. HCA. Yeah, very similarly. If you said the words extended, I'd give you an okay there. But is anything suggesting that we're going down yet? Not quite. Let's go to your daily. So realistically, all I'd be waiting for is some sort of bearish imbalance to form here on the weekly time frame. I could be a little late, right? You have a bearish imbalance here, but it's just a little bit less or lower probability when you play with fire like that. So, yeah. And you had the overarching weekly bullish imbalance here. So despite forming that daily imbalance, we wouldn't anticipate it to give us really anything, knowing that we had that weekly imbalance below. Higher time frame trumps. And yeah, so at this point, really 403.05 for the buy side liquidity looks decent. But yeah, this is definitely not something that I would really get in the mix with. But anyways, that's it. That's all I got for now. So I'll catch everybody at some point over the weekend. I'll do some sort of weekly prep or something like that. So until next time, good luck.